How can you see what's... Good morning, traders, and welcome to the live trading webinar here at Bookmap with Scott Pulcini, futures trader. We do this every Thursday. Scott's a futures trader who has a nice backstory here. Futures trader who has a nice... He has been trading for quite a while and at a very, very high level. We're very lucky to have him here at Bookmap. So he's going to go through how he uses Bookmap and in the live analysis and live trading. It is in demo paper trading mode, so I will go through this. It's important to learn or listen to the disclosures here. But you're going to learn not only about the entries and exits, but about the trade management and his mindset, his outlook on the markets. I have Scott's contact information here. If you want to reach out to him, he does have a live trading room. He has an educational course. He has a website, etc., an email here, so you can reach out to Scott directly if you have any questions. Let's go through the disclosures and turn it right over to Scott. Let's see, everyone can hear me here in Discord. Yes, and we're good in YouTube. All right, general disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. The risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital to consider trading. Past performance is not necessarily indicative of future results. Scott, are you there? Ready to go? Let's see here.
You hear me?
There he is. Okay. All right. Let me get your screen here, and then I'll project it.
One second here. Got my screen?
Yep. All set to go.
Okay, cool. All right. Per usual, there's 14 Fed guys talking today. Feels like it's literally like 6, but there's one talking right now, and the market's all over the place. That's how it's been lately. Again, I complain every day in my trading room. I don't remember in my 20 plus years of trading ever having Fed guys talk constantly all day, basically every day. So I don't know what's changed, but it affects the markets, especially in these algo driven days where these algos are set to trade off of any kind of keywords that come out of their mouth. So when they're talking, I tell my room every day all bets are off, and we're playing different. We have a reversion trade we're playing, even with the position trading stuff that I'm showing you guys. You can play it, but when new information enters the market, again, all bets are off. So it's if you want to roll the dice when they're talking, you just got to accept the risk, because anything they say could just completely flip and then flip the market, and new money comes in and so on and so forth. So and that's what's going on right now. So trade at your own risk is what I'm telling you. So you can see here this large ice came in here, 2,000 buy ice. There was 800 stops here. This is what I call one of my 6 setups. This is a double whammy. We have distinct names. Some of them are funny on purpose, just to lighten things up. But double whammy is the dumb money sell stop puke, the retail trader puke, into the waiting hands of the smart money. We call them smart money because they're bigger and they can make the market go where they want. So that makes them smart. So that's where that comes from. So we'll trade off the zone again. I'm not very thrilled about trading right now because of the guy Kashkari. It keeps chirping, but we'll hear. If he says something, I got this squawk. You can see my squawk here, and you can see the headlines. And then we also have the edge over here that is now oversold. We forgot to look at this last week when I added to a short position, and I took it on the chin just because I made an error, and I should have been out of my original short, and I added. If you guys remember that, I was complaining about that. But so right now we're watching the zone to see how this reacts. So we have a new spreadsheet that we're using in my room. We're trading a different trade, a reversion trade in there. It's more of a shorter term trade, but with that spreadsheet, I can get the exact prices for my position trading strategy, is which you guys are watching on these webinars, right? So we put in the zone top and bottom, so that you see the zone top is 37.81 quarter. So we put that in here. I'm getting all that feedback from people entering the room. I mute it every time, and every time it comes back on.
There's all sorts of toggles to hit in your Discord in the lower right. But you know what? I'll yeah, maybe. I don't know if you want to do it now, Scott, or you want to do it another time after this.
That's fine. I mean,
okay,
it'll probably start to dissipate anyway as we get into it. So.
All right.
There's up in the bottom, we put the current ATR, which is 8.78. So ATR is average true range. That's telling you the current volatility of the market, which is very important. Many of these algos trade off of that. So you can see here we're coming down to a spot gamma level as well. So this could be a decent support level. He mentions this exact level in his commentary this morning. So this is an area where we can bounce. Bigger picture wise, though, this is not looking promising overall. There's my drawer. A second. There we go. Of course, I'm having issues. Okay, hold on, guys. I gotta restart this. Go back to here for a second. I gotta start this drawing tool. Let's try this again. All right. So Monday, Tuesday-ish, had a smaller balance area. So let's go back to this stuff. So this was looking very bullish here. I mean, bearish at the time. We broke down from this balance, and we formed more balance below it, and we were down here. And actually, Spot Gamma said that the options complex looked very bullish the way things were lining up. And I told my room this morning, I said, he is calling for a bounce here. I said, this is not the best place to do it. And he was saying buy some calls so you limit your risk, because this thing could have easily fallen off the table. But once we got through the high volume node of this balance area, that's a failed breakdown of that. It's my favorite trade, the failed breakdowns of balance areas. And then we got to the high volume node of this bigger structure. I said that's where you want to start adding if you really want to go long. That's kind of confirmation that this market's going to rip, and that's exactly what happened, right? So we ripped up here, we gapped up, and then we built balance, and then we tried to break down, and we had another failed breakdown. So what should have happened is this market should have done this just like it did it here, right? That's what should happen when markets have failed breakdowns or failed breakouts the other way, right? And you can see this had its chance to rip, and now we're back here. Something's up. That's not what you want to see if you're bullish. This thing should not have come back anywhere near where we're at right now. So this is pretty much, and this looks like it is forming a bigger balance too. But I mean, this, based on what didn't happen, I'm expecting a move down to this area, probably on this webinar, I would guess, 37.30. So that's what is expected. But I am a day trader, and these volume areas are, the real-time volume is the most important aspect of the market, because this is what's happening right now. You can look at charts till you're blue in the face. If a big player comes in and disputes that view, it's going the other way, right? So
ES December top sell ES 773 contracts.
So we got a new setup here too, but obviously this double whammy, this buy ice just stepped in, is now taking it on the chin.
NQ December iceberg sell NQ 151 contracts.
So the bottom line is, I come up with a thesis, I come up with a story, and then if I get setups in that direction, that is obviously confirmation, and you can trade bigger, right? We talk about the risk factor every single webinar, and that's built in here, where you shouldn't be risking more than 2% of your account size at any time, right? 1.5% to 2%. 2% is max, and then you shouldn't be risking more than 6% in a day, right? So, but many times if you get setups in important areas that fit your thesis for the day, then that is an A plus trade, and you can trade 4% on a trade, but you still can only be risking 6% in a day. So you got to be aware that, okay, I'm taking my shot here, I have strong conviction on this trade, everything's lining up, I'm going to trade bigger. But if you're wrong, you basically got one more bullet and you're done for the day, right? So you can trade bigger in individual trades, but you still have to respect your daily loss limit. And you guys have all heard my stories, 2 different times when I was trading for my trading firm, King Street Trading, where they violated as well. So we had risk managers. Well, it's ultimately my fault, but we had risk managers for a reason. And my drop debt was supposed to be $100,000 for the day. So if I went down $100,000, they're supposed to shut me off. 2 different times, 1 month apart, I went through that. They called me. It got to the point where it's kind of they call it negative reinforcement, right? Like there's so many times I'd hit that level and I'd ask for another 25 grand, right? Like, so I'd go down 100 grand and I'd ask for another 25 grand. They give it to me, I'd make it all back. It happened again and again and again, right? So then they started to become conditioned where they would stop even, in the early days, they would just shut me off, right? Kind of like your brokerage will shut you off if you have that in place, which you should. But then as I got more experience and I was making millions of dollars for the firm, it was more of a phone call, hey, are you okay? You on tilt, and then I'd be like, I'm fine, just let me go, right? So that was an error on both our parts, and it cost both of us, my firm and myself, a lot of money. So 2 different times, my drop debt was supposed to be 100 grand, and I lost $800,000 in about 8 minutes. This was back in 2004, and literally a month later, the same exact thing happened. So my point is, if you don't respect your daily loss limits, you are going to eventually take it on the chin and potentially blow out your entire account. So if I would have followed my own rules, and my firm would have followed the rules for help me, I would have another $1.4 million in my bank account. So that's a painful story to tell, but once again, the reason I do these webinars in the trade room is for you guys to learn from my mistakes and my triumphs, but mistakes as well. So you need to get that set up with your broker where every trader thinks that they can handle it. When they go down, they'll shut it off, and it's a whole different story, especially if you're a competitive guy or girl. You think you're going to stop, and then you get pissed off, and then you're like, screw this, I'm going to trade with another 4 grand or whatever your account size is, or a percentage of your account size, and then all of a sudden you turn around and you lose 70% of your account in a day. And then you wake up the next morning and you're just thinking, what in the hell was I thinking, right? It's just trust me, it's going to happen to you eventually. So just get things in place before it happens. I love the quote, the Mike Tyson quote, everybody has a plan till they get punched in the mouth, right? So get it in place before you're emotional is what I'm saying. That's my one early rant. Hopefully that's all for the day. All right, so you can see there's a bunch of stuff in here right now. I trade off of the most recent setup. This is the most recent setup. This is 769 sell ice. But you can see this whole area is very important, because this is what this SI indicator tells us is where these traders are taking a stand. We already know there was huge buy ice here. There was puke, so somebody absorbed those as well, right, in the order book as buy orders, responsive or passive buy orders. So we know there was buy ice. We know there was someone absorbing this puke, and there's some sell ice now, and somebody's.
So it'd be nice for buys, yes.
And they're buying this as well. So it's getting confusing in here because there's so many setups firing off. But the point is, this area is very important. Whatever way we break from this basic area, I understand it's a 20-point zone or range. There is a lot of investment in this area, and that's what we look for. That is the whole crux behind the setups, is finding traders that are loaded up one way, and then we play for when they have to puke them out. So when this moves out of this area, you're going to see a big move, right? We just don't know which way it's going to break it. And that's where you come up with your thesis, so on and so forth. So I'm still leaning short based on what we just talked about. But if something happens and this rips up higher, then I play it, right? Because this is the king. The real-time volume is the king. So I'm ready to pivot if this doesn't break, right? So this most recent setup here, we'll just draw this zone quickly. 37.6850 is the top of the zone. We're playing this black zone, 37.64 quarter. Gotta keep in this ATR. ATR is now up to 9.01. Down here, and we see our prices, right? So if I were to short this aggressively, I'd be in at 37.54. 50, I round up on my entries, and then I'd be stepping out here. I'm risking 24 points. That means I can put on, based on my account size, risking 2%. I can risk basically 3 ES or 28. Yeah, I'm rounding up, obviously, or 28 micros. So this is, this is the most important thing you need to be doing before trading and before analysis, is respecting your account size, because if you're trading too big for your account, you are going to blow out eventually. Can't stress that enough. All right, so on the upside here, let's take a look at our Ludwig levels. You guys have been on these prior webinars, this is one of the things I use to day trade. They're extremely powerful, especially when you get setups at important levels. So we'll come back to NASDAQ here in a second. I think there was a setup in NASDAQ as well while I was talking here. So you can see we're bouncing off. So this is an important area. Whatever way if this can hold, then we're probably head back up. You see here, this is yellow lug. This is extreme standard deviation of VWAP. And that's confluent with the bottom of this market profile. This is a two-day composite, and you just heard more. So this is a tradable area, right? These areas, tops and bottoms of market profile composites, major lugs, important areas on the bar chart, where we'll go over that as well. Those are areas where you want to wait for to trade. In the middle of these areas are not good areas. You're going to get whipsawed to death. These are important areas, right? So I'm leaning short, but we got to get out of this for this to happen. If this gets out of this, I think we're taking a quick trip down to here, right? So now we have our setup in this area. All these setups, this is going to either lead to that or that, right? And again, we're in an important area. So let's draw the newest stuff. I'm probably going to delete some of this because it's starting to give me a headache. Let's get rid of the stop run. More sell ice here. That's another 1,000 sell ice. Let's see where that stretched to. All right, so what I'm going to do is I'm going to just make this one. Let's see here. So, there's always questions on how to draw the zones, right? So I turn off the bubbles. I've just learned that recently. Someone from my room actually helped me with that. I was struggling drawing them just to the bubbles because I did not have this last traded price line on, right? Because when I first started trading with Bookmap, it was annoying to me. So I turned it off and then I forgot it was even there. But to get to that, you go to configure invisible components and then turn on last price. You could have best bid ask as well. That's just too much for my brain, right? So I turn that off. I know Bruce likes that, but I don't, right? So I turn that off. I don't care what the bid ask is. I care what's actually traded, right? That's the whole crux of my trading. I can care less if guys are playing games with the order book. I want to see what actually trades. You can see here where this spike happened. You come up here and get your crosshair, and then you take it down to the spike. You can see where the spike happened. It actually started way down here, where this price point, right? So you can see the spike started here. Actually, there's more over here where the bigger size started coming in, right on that price point, right? So that's, again, I'm supposed to be using my hotkeys, but so that's that. That was, I had drawn this, but I don't think that's right. So I'm going to remove this. And then let's see where this traveled to. So then you just want to incorporate all the prices that happen in this spike, right? You can see all the way down to basically this spike right there. That's the newest zone. That's 1,000 ice, and now we trade off of that. But I do know overall there is a lot of volume in this area, and somebody is going to be puking here soon. All right, so now we have to redraw our zone, or re-input our zone 3770. So it's basically a 1-point zone, which is pretty tight. So let's put this in here. So I'm going to go short. I can short at 59. I round out 59 quarter. I stop out at 80, risking 3.27. Obviously, you can't put it. You can put it on micros, but you can't split this up. So we'll just keep 3 as our contract size. I'm risking about 21 points. So I know we're dancing around this yellow lug right now. So I'm going to wait for a. I also know there's all this conflicting volume in here. So you see when how I've been trading is if we're above the yellow lug, any setup I get, I'll go in aggressively, meaning as soon as it gets just outside an ATR, I'll enter the trade long, right? If we're below, as soon as it gets outside an ATR, I'll enter it short. The conservative entry is to wait for full ATR retest, failure, and then 10%, 110% of an ATR, then I enter, and then I stop out an ATR, 110% of an ATR on the other side of the zone. I know that's a lot of points, but this is, this is a position trading account where it's, I give it more room because I want to avoid the algo nonsense. And when there's nothing going on, you will get, and everybody knows it, right? You'll get the whipsaw. It's in your favor, then it's back, then it's back, then it's not, then it's back, then it's not. It's just. I've learned from watching thousands of these setups, the best place to stop out is outside of an ATR, the other side of the zone, right? So I don't let the algos screw with me, right? So right now, the setup I just drew, I'm going to wait for ATR retest failure either way I trade this because we're dancing around the yellow lug. So I don't really have a clear picture. We're not clearly above. We're not clearly below. You see it pop below a couple times as well. So I'm going to wait for full ATR retest failure to go short, full ATR retest failure to go long, which is also wise too in an important area like this because this can go either way. This could hold and come right back up, or it can break and come straight down in this most recent market profile composite before this one. So that's what we're doing with this, and that's barring if something new comes in, then I got to set it up all over again, right? So meaning your ATR right now is 9.05. I basically have to see 9 points or 9.25 points outside. Let me get rid of this. This is confusing too. I am waiting for 9.25 points outside here. That would be an ATR. Then I'm waiting for retest. Then I'm waiting for a failure. Then I'll go short. And the same way, go long. Right? So what if this comes down here, goes an ATR, comes up here, and then does that? Well, the long is now invalidated because it was able to push more than an ATR away from this volume event. Again, from watching thousands of these, I have learned that if the market is able to push a full ATR outside of full ATR away or an ATR away from the volume event, that's not what you're looking for. For instance, if you want to be long, this should not get an ATR outside of the zone and something's up, right? So that's how I've traded them, and it's the best way that I've determined to trade them. I tell you guys every webinar, this is the science, right? There is no disputing. There was 1,000 sell ice here, right? How you trade it is the art. My art is trading a specific way, and that's what I teach, and that's exactly how I trade them. You could trade them any way you want. You can say, I'm really bearish here. That's sell ice. I know big paper's coming in selling too. And again, paper is not always right. We have a distinct setup called broken ice when they're wrong, right? But you could say, I'm just giving you hypotheticals. I love the short here. Paper's selling too. I'm going to short right in this zone, and I'm only going to risk, an ATR above the zone, right? You can trade them however you want, but It's advisable that you listen to the way I trade them, because I've watched, unless you've watched thousands and thousands over the last 3.5 years, 4 years, and you probably
Hi
want to,
there.
trade the way I'm trading them to begin with, and then as you get more experience, you can have variations of what you're doing, right? But this is the way I trade them, and it's not because I like risking 20 points on a trade. It's because I've determined that's the best way to stay out of the nonsense and stay out of the noise, right? All right, so we're letting that one develop. FYI, there was a large stop run here in bonds, almost 2,000 stops, which is very large. I'll just draw this. I doubt I'm going to trade this, but you can see it was not many price points either here. Be interesting though, when you start seeing big size in the bonds, a big move is imminent in the equities. So this is big size, right? So just to make this, no, damn it, I did not want to do that. Change the color. Had a meeting with Bookmap on Monday about the drawing tools, so hopefully we're going to be getting some more modern drawing tools availability, where you don't have to go through 45 clicks to get to colors and stuff like that. So a nice long meeting. I gave them my input and feedback, so hopefully we're not using Atari drawing tools here very shortly. All right, so that's the huge stop run. I'm probably not going to trade this. I got enough going on, but that's the area. You trade these, guys. It does not matter what market you're trading, futures market. It's all the same stuff. It's volume. Volume drives markets. You trade these the exact same way. You find out the ATR, and you can come up with a thesis with your structure. But this is the driver, and then you trade off of this and that. Right? It's the same stuff. I don't care what market you're trading. Wheat, bonds, soybeans. It does not matter. It is volume. It's caught traders. That's what we're looking for. So like this one, I obviously missed. I don't know what I was doing on this. This must have just gone off here. I will draw this because soybeans is one of my best markets, favorite markets. And you want to be watching multiple markets. I know a lot of people think they don't have the bandwidth, or know they don't have the bandwidth to watch multiple things, but all you're really doing is waiting for setups, right? So threshold setups only occur in markets most times, 3 to 5 times a day, normal threshold. There's days like today where stuff keeps firing off and it's like well above threshold. Well, then you got to up your threshold, right? So that's one thing that you got to pay attention to. But my point is, you can watch multiple markets. You're not going to be getting 85 signals in a day. But if markets suck, like these equities, like right now, like you say, hey, I don't want to trade when a Fed guy's chirping. I'm gonna pay attention to grains or crude, or crude and gold will be affected by the Fed as well, but to a lesser extent soybeans and the grains. But you can, if you have other alternatives, you're not forcing trades in crappy markets, right? And this is a great alternative. So let's just take a quick look here at our parameters. I enter this in the spreadsheet too. 0.38 is your current ATR. You can see it there right in the middle. So I'm using at 14.
LNG, 178
So that's natural gas. That's the number coming out. So 2.27 is the ATR right now. So let's just enter this in real quick so we can get our exact values. So I'm not guessing at prices. Coming our little hand.
December iceberg by 745 contracts.
Let's see what's going on here first.
December Stops 714 contracts.
All right, so I didn't enter aggressively here, but if I would have entered aggressively, I would have just let this fill, and then I would, even with the new setup, and then I would have trailed my stop based on this newest setup. But I did not get in, and I'm not playing retest failure for this setup now because something new came in. So now I gotta wait. But now I know we're clearly below the yellow lug. Now I could trade this recent setup aggressively. So we'll go over that. Meaning the minute it gets outside of an ATR out of this area, I'm going to short it. I wasn't doing that on this setup up here because we're right at the yellow lug, right? And that's where it can get real choppy. So let's do this all over again, then we'll look at soybeans. Usually soybeans is a slower mover, so we got some time, I would think. Once again, double whammy. Huge buy ice, 1500. It was only 700 sell stops too, so make sure I got that drawn correctly. I do not. draws on there? Why does this look like a black zone, but I'm not? Hold on. Where the edit button wasn't working there. All right, so this was the bottom of that. And I like to color my double whammies dark blue just so I know what setup it is. I know this is annoying to watch, but you can imagine doing it 85 times a day. That's that, and that's that. All right, so now we have our most recent zone. So there's a double whammy up here, some sell ice, there was a stop runs, and now there's more ice here. Again, the move out of this area is going to very, very likely be a whopper. Okay. So let's enter 65.50 is the top of the zone, and 59.75 is the bottom of the zone. Let's put those values in, and I'll come back to soybeans. Current ATR is 9.15. So now we have our new prices, right? So now, as you can see, I don't know why I lost my connection there. Well, first of all, we're still a little over, no, we're not oversold. So with this edge product, this is delayed. This is delayed 5 minutes. This is the real time. So you can see we're not oversold anymore. This is just showing you all 500 stocks in the mini S&P, how many are above or below their 5-minute TAS boxes. And they're just mini market profiles. So this is when it tells you when you see the red above that line, it means it's extremely oversold. Or green is extremely overbought. Potentially come back to that. I don't want to confuse you guys right now. So you can see we are still bouncing around the shallow lug, but we're below it. And I already know, based on my thesis stuff, we just talked about the bigger picture, and we're breaking down out of this, so I will short this aggressively if it breaks below this zone, meaning I'm not going to wait for ATR retest. I'll still go long. To go long, since we're up below the lug, I need to see the full ATR, the retest, the failure, 110% of an ATR, then I will go long. All right? I'm just letting the market tell me. All right? So my entry here was short aggressively. It's all in the spreadsheet. 37, 49, 75. I'll round up for my entries. I can put on 2.63, so I'll still put on 3. And I'm risking basically 26 points of risk, right? But the ATR is what determines this risk. So, I mean, the markets are pretty volatile right now. So, if this gets moving in my direction, I can make multiples of that. That's the goal, right? So 37, 49, 75 is where I will enter the short. All right, so we'll watch that. Any questions, Bruce, on anything I've talked about so far?
Yeah, just a minute.
And then we'll look at soybeans here too. I don't want to miss this trade. Let's look at our lugs real quick.
Yeah, wondering if what you might have inferred from that move in the ZB in the bonds.
I haven't inferred anything yet because I haven't really done anything. Let's look at. All I know is lug wise, it's looking bearish, right? So came down, tried to hold the blue lug, didn't. We built new lug levels. So when you build new lugs, it should hold prior blue directional yellow. If you think it's going to make a move back up, you can see it couldn't even get anywhere near this, and now we're back below the yellow. So this is telling me short right here, right? Just coming up with thesis, right? But I let the real-time volume confirm everything I'm talking about. On the bigger picture, I don't even have the zones drawn here, but we can take a quick look here. So this is looking bearish as well, right? Current structure, balance breakout. What should happen? Should do that. Came back.
Stock sell ZW 220 contracts.
I'll be there in a second too. This should have held. Not through here, no dice. This is an official failed breakout. And you can see there's nothing here structure-wise. This is showing me that that's going to happen. Again, I just come up with my thesis, and then I confirm it with the volume, right? So if they line up, then it's go time. Especially, important areas like the shorter term stuff, like the lugs and stuff. I already know that looks bullish too. Where is that market now? Right. So what you can do here, since we're below the yellow lug, ATR is 0.19. I forgot how we did this. It's 0.19 of 31. I can't remember how to do it off the top. I don't trade bonds very often. I'll keep an eye on them. But the bottom line is you could short this. This is looking bearish. It's looking bearish from the bigger picture, the lugs, and this was able to obviously poke. I'm assuming this is an ATR, but if this gets a full ATR below here, that's bearish as well. Or you can wait for that. But this was the volume event, and we're below that. So it's looking like bonds are going to move lower. In the old days, the equities would move opposite of bonds. In recent years, they move in tandem. So I don't use that to base my judgment, right? I do know when you see big size coming through there in the SI indicator, a big move is imminent in the equities. So that's all I need to know. But I'm letting this volume tell me what's going on. I don't say, oh, they're selling bonds, so I'm going to buy ES. That's not how I trade, right? And I let the real time volume tell me what's going on. All right, so we just heard this. I just stopped running wheat. First, I just want to make sure I don't miss this trade here. All right, so with the lugs here in wheat, beans, we're below the yellow lug, so that means I can enter short aggressively, first and foremost. Let's see what the market profile looks like. That's not right. So this is interesting as well, right? What story are you getting from here? From the market profile? Well, first of all, we gapped down overnight and we opened in this prior market profile composite. When markets get into prior composites,
soybean iceberg sells ES 201 contracts.
Right on cue, the tendency is to get to the other side. So my thesis right now is that's going to happen, right? And then you look at this. This looks just like bonds. But you can see now what do you see here? Like this is really important what's going on here, right? Like shorter term, yeah, it looks like a smaller fail breakout, kind of like we just saw with bonds, right? You had a little bit of balance here and then tried to hold the high volume node and just gap down from there. We just saw that gap. But look at the bigger picture. This is what you need to know when you're trading, so you're on the right side of the trade. You see that? That is the ultimate balance area. These are traders placing bets on the next move. Where are we? We're below that. How are the longs feeling right now? The longer term longs. They're not feeling very good, right? So in this situation, you do not want to be taking longs. I don't care what, if you get a long signal on the SI indicator, if I do, I'm not taking a long, right? This is showing me, do you really want to stand in the way of all these longer term traders puking out of this? This is, if we get a long signal in the middle of it, then you trade it accordingly. But right now, I will not take a long here regardless, and I'm just looking short. And if I get a short, then it's real go time. You're going to see, so the rule of thumb is when you get a balance area, the market generally will move 100% of the balance area range. So this was basically 1360. So that's a 140 cent move. You can expect a 140 cent move out of here eventually. It may pause a little bit, but because that's these guys puking. That's how you have to view the markets. It's very simplistic, but that's what's going on. Trust me. So, and we gap down, right? So we already know that looks ridiculously bearish. And now we're accepting in this prior market profile composite. Just take a quick look at what that is. This one back here. We traded up in three or a few times, but this is still important, right? This was back in early July. I don't care when it happened. I just know it was a composite, and I know we're accepting into it. So all this is pointing bearish to me, like big time, right? So, but what just happened here? Well, we got new size, but this buy ice held, right? That's not bearish, obviously. Now we have some sell ice coming in, so I'll draw this new zone. So the point is, this thing's just not ready to break yet. But I'm not going long this is a rare exception, right? I'll usually take these setups regardless, just based on the lugs and the way they're trading them. But in this situation, I'm not taking a long. You know when I'll take a long is when this thing can prove it can get back to the high volume node of that balance area. That's when I'll consider longer term, bigger type of trade. If this can get back through this, then what's that? Well, we've been talking about this all morning. That'd be a fail breakdown. I want to be long through this, above this zone. That's where I want to be long. This is not a good area to be long. Just imagine you're the big trader. How are you feeling right now? And this thing looks like it's going to do that. You're ready to puke everything out. Right? This is not a good long area. It doesn't mean it can't come back. When markets break down out of balances, many times they'll come back to the bottom or the high volume node, and I understand that. But what are my odds? Are my odds better of that happening or that happening? I just don't want to take a long in this situation is what I'm saying. I'm not going to. And if I get long setups, I'll watch them and I'll wait for the short setup and then I'll get it. If the long set, this is the beauty of the real-time volume, guys and girls. Like, that looks like it's going to die. Anyone looks at that chart, I mean, I can bring my 12-year-old daughter in here and say, hey, what do you think is going to happen here? And I explain a little bit of it. Oh, it's going down, right? So how many guys are getting short right now on that chart? Like, oh my God, this thing's going to get killed, right? But guess what? The most important thing is telling you it's not ready to break right now. So everyone right here who thought this thing was going to die, that is not using Bookmap, had no idea that 300 buy ice came in, and now they're eating, 8-9 cents shoved down their throat. Like, what's going on? This thing should have broke. Well, if you have this information, it's not ready to break, and you could go long. This is a setup that you could have gone long. But the point is, if you don't have this information, you have no idea what's happening. I have this information. I'm staying out of the way until I get a short setup. See how that works? That's why this is the most important information you can be using in your trading. Bar none. I don't care if you're the best technical analyzer, whatever the word is. You don't have all the information if you're not using this. Period. Now, there's no argument. You don't have all the information. If you're great at technical analysis, you'll be even better using this, right? You'll be 10 times better, in my opinion. Let's draw this. If this turns into a bullish setup, great. I'll let it go. Not taking it. If it's bearish, it's go time. Right? After everything we just talked about. So that's what I'm watching here. So let's quickly put these values in. 57 and 56. Nice tight zone as well. Completely lost track of what's going on in ES. Hold on real quick. I'll come back to soybeans here in 1 second. All right, were we able to get an ATR above here? Real close. Let's see. No, 9.31. So the top of the zone was at 65.50. We only got up to 73.25. So that was just like 7 3/4 points. So that did not get an ATR above this zone yet. So this is still. I'll still trade this on the short side. If this is able to get 9 1/4 points above here, then this is canceled, and that's potentially a bullish setup. Right? So still keep an eye on that. Let's put our zone in here, and let's tab 57 and 56 are your prices here. It has a dummy factor where if you put it in the wrong column, it tells you you're being an idiot, which I get all the time. 7, 6, okay. And then put in our ATR. And I lost that chart. Hold on a second. What did I do with the chart? Let's see, hourly. Sorry guys, it's hard when you're using one screen, then you lose track of your. Can't find the chart now. Yeah, there it is. 2.40. There's your ATR. So put that in. I'm not going long, but I'll go short. All right, I know we're below the yellow lug, so I can enter this short. Sorry, wrong strategy. 1353.50, I round up, and I can put on 6 based on my risk. I'm risking basically 6 points. I can put on, actually this is wrong. Hold on. Put on 11 actually for this risk. So I enter at 50, and I stop out at, if I round up on my stops, 59.75. 53.50, I should say. So I know I can put on 10. Right. 350, I'm getting, this is an aggressive entry, just that's 110% of an ATR. That's what that value is, right? So that is set, ready to go. As long as this doesn't trade a full ATR above here, I'm going to short it. If this does get a full ATR above here, then this is canceled, because it should not be able to get a full. If this is truly bearish, it should not be able to get a full ATR above here. Then I cancel it and I wait for the next one. If this was a neutral setup, a neutral area on the charts, I would trade along in this situation. But everything I just talked about, I'm not taking long. So I'll take the short, or it's going to be canceled. This is able to get, and I'm even going to put a alert here so I know to cancel this order. So it's 2.44, so basically 2 3/4 points. It's 59.75. Come to your cloud notes, notifications. So if that trades there, we get a nice little pleasant sound, and I know to cancel that order, right? And if I get filled, I have a sound on this actually too that tells me my fills. So that is locked and loaded. Yes, it's completely gone quiet.
By CL. 158 contracts.
Little crude action, go over there. Right, so this is the whole point. This market's completely died. I guess nothing goes on when one of the 45 Fed guys aren't talking. So I'm sitting here watching paint dry in there, potentially forcing trades. I'm sure some of you are. So first of all, that looks like an ATR above there. What do we need? 9 1/4 points. That's 74.75. That's an ATR. That is canceled, right? My short idea is now canceled. Now what will I do? Now I'll go long. If this comes back, retest, fails, I'll go long. I may miss it. This is the way I trade, right? We're below the yellow lug. I'm not being aggressive. And now we have a new setup anyway. But my point is, if you're waiting for retest, you may not get it sometimes, and I understand that, right? But I know the safer play in this situation is to wait for that, especially with the market profile, composite, everything we were talking about. So if I don't get it, if you miss it, you miss it. There's another setup right around the corner, like this one, right? So now we just draw the new one. That one, the old one's invalidated, and I'm thinking about deleting this zone, but it was such a big zone, important zone as far as size-wise. I'm going to leave this in here. This first double whammy, it was like 2,000 buy-eyes. So, but we can draw this. My threshold for ES is 500 stops. This was obviously over threshold, meaning amounts that I will trade off of that are important. Again, that's from watching thousands of setups that I've come up with the thresholds for each and every market. That's part of my course where because 500 in here is, so say if you got my threshold in NASDAQ is 150. Well, 150 in ES means nothing, right? So I'm not trading off of 150 in ES. NASDAQ, it's threshold, right? So you need to know your market and what's a relevant size, what's not, right? So this is my threshold right at my threshold for stops in ES. That's that. And then, so that's your most recent stop run. So we're going to see how this reacts to this zone. Let's see where we are on the lugs. This is basically just bouncing around the yellow lug, right? So that would have been pretty aggressive going short there anyway. But no, this is officially above this yellow lug. So I'm going to take this long. If this rips up higher, I'm getting in aggressively, meaning I'm not waiting for the ATR, the retest, and the failure. I'm just getting in right away, right? And what just happened here? This show you that this is bullish right now, short term, right? I was thinking we were going to break. The volume told me otherwise. Did you see me put on a trade? No, because the volume didn't allow me to put on a trade. I thought, especially when we broke down through here, this was going to happen. Right? How many traders saw that and got short? Well, guess what? I didn't get short because my volume events told me, no, this is not this got an ATR above this first zone, right? That's not a short. It's not giving me confirmation of the short. You see how I just avoided a loss? And guys, avoiding losses is just like having a winner, right? Because if you take a loss, it's going to take you basically 2 winners to get it back, hypothetically. So avoiding a loss is just like putting on a winner, right? So I was all out. I was ready to go on the short side there, right? We just talked about all this. What should have happened? This thing should have just died, And once again, we just put in a buying tail. So that should not have happened. You certainly shouldn't have been getting bullish setups. That's telling me now that's going to happen, right? This is what trading is. It's if-then scenarios. You're waiting for something. If that doesn't happen, you're ready to go the other way. Well, that should have just died. Well, then why? If it's going to die, why am I seeing bullish setups, right? So here we go. Now let's trade. Enough of the chirping. Let's put this in. 37.82, 37.79. Not sure why that's not right at that price. Let's see what I did wrong here. Actually, that started more here, but this was where the threshold came in. Actually, it was up one. You see right here, this is where you want to do this. Spread it out and then use your cursor. That actually started up here. So I got to change this zone. Drag it up. That's the proper zone. That is 37.79.75 and 37.82. So we come up here, 37.82, 37.79. ATR is now 9.44, so it's increasing. Now this tells me my exact price I could enter this. So we're going above the zone. I can get it at 92.25. I round down on the entries, and then I stop out at 69.25, risking 23 points. I can put on a 3 lot, right? So now 92.25. I get my order set up, and I'm ready to buy that aggressively if this gets out of the zone to the upside. Right now we're just bouncing around, but so that's where this is the aggressive entry, right? We are above the yellow lug. I trade these areas aggressively in the direction of, if we're above the yellow lug or below the yellow lug. We're above it, so I take my longs aggressively, meaning I'm not waiting for that. I'm just getting in. And based on what I saw down here, that gives me even more confidence where, like I said, on every setup, you could wait for retest failure, but some of them you're not going to get, kind of like this one, right? If you were waiting for the retest failure, you're out of luck. But, that's fine. This is just, there's another setup right around the corner. You don't need to fret over missing something. There's thousands of setups in your future, right? So just let it happen. All right, so I will trade that to the long side aggressively. Soybeans, obviously nothing has happened since we haven't heard anything yet. Never got an ATR above there. I'll still short that aggressively. We were going to look at crude. Any questions, Bruce?
Let's see. Yes. Hold on.
So you can see the stop run in crude. My threshold in crude's 150. That was threshold 159, meaning I can draw it and trade it. If it was 140, I wouldn't trade it. 110, I wouldn't trade it. I understand some of you have my course back. Well, I made that course in the summer of 2020, and the threshold was 100 or 110 back then. I have since increased it, right? So you have to adapt. It's not that, oh, I made that course, I got to stick with it. If I keep seeing, the hundreds not work as well, then I have to have my threshold, right? And the official threshold in crude is 150 now. So if you have the course and you're like, what the hell, I've been trading off 100, well, then if you're in my trade room, you definitely know that information. But the new course will have all updated thresholds, and it's going to have the sweep indicator. It's going to have a bunch of stuff that's just taking me forever to get to, obviously. But, either come in my room or you can wait for the new course. And, if you bought the prior course, you'll have a deep discount to the new course. So when I send out the mass email, if you already bought the first one, you'll get a deep discount to the second one. If you're a member of my room and you buy the course as an active member, and when I come out with the new course as an active member, then you get the new course for free. So that's one of the perks of being in my room, among the 100 other things, like the spreadsheet. And please don't send me messages asking for the spreadsheet. That's proprietary, and that's part of the paid membership in my room. That's what they get, right? Like I share a lot of information, through these Bookmap webinars, but there is some stuff that, that's what you get if you're part of my room. All right, so let's set this one up. 8872, 8862.
They also get insights to incredible rants.
Yeah, and verbal lashings. So if you come in there and you're a clown and you just start throwing an idea like, oh, I just shorted that, I just got 20 points, or I love the short here, I love the long. Well, if you can't put why you're doing it, it doesn't benefit anybody in the room, right? So it's not a room where you're bragging about your trades, right? You can brag about your trades all you want, but what I want is, I want it to be a learning experience to make great traders, right? So if you have a winning trade, we'll post why you put it on, where you put it on, why. If it's after the fact, mine guys start to complain about that too, like people just showing their winning trades after the fact. But if you can show why you did it, that's valuable, right? Nobody gives a flying what if you make money trading unless you're splitting your money with us, right? If you want to share your money with the room, then everyone's cheering for you when you make money. But no one really cares if you make money or lose money, right? But what they care about is if you have a strategy that works. That's what I want to see in my room, right? And I'm always open. I never jump to, how do you think, like, I added the lugs and stuff like that. It takes me a long time to add something new, and I have very few things I trade off of. But if I see relevance in what you're doing and it's worth it, for the room, then go for it. I'd love to hear it. There may be something out there that I can enhance my trading with, right? So I'm not shut off to new ideas. But I have to watch them, and this should go for anybody in here. Everybody's always looking for the shiny new indicator, the holy grail, right? I'm not saying there's certain things that can help you in certain market conditions, but you better go back and test the trade. And this is other one of the 100 things that is great about Bookmap. You can go back and you can take the data feed, which I offer in my room as well for all these products. You have them on your computer too. For whatever products you're watching, but you can go back and replay the day. You can fast forward it so it plays in 10 times, 100 times the time, so on and so forth. But you can practice it. So if you have a new indicator and you want to see it work, replay Bookmap and real time. It's not real time, but play it like it looked, and then test it. But don't be just throwing stuff on your chart because one guy put up a winner anywhere, unless you can validate it for yourself, right? All right, I'm starting to rant again. So let's just get this set up. So first and foremost, let's check. We already got that in. The ATR in here is 29. I put that in 29.1. So let's take a look at our one structure, right? So this is an important zone, right? So this was an area where this market gapped down that eventually led to all of this. This is the first time back, right? So this could be a stopping point. But what is the determining factor right now? Well, yeah, this is an important zone, but guess what? It just built 2 days of balance, 3 days of balance. That wasn't 2 days. It wasn't 3 days, about 2 days. Or just yesterday, maybe. I can't really tell right here, but here, I'll tell you right now, just so we can be official. So it started on 10. Yeah, this is 1 day of balance, right? It doesn't matter. I mean, the bigger the balance, the more important it is. But the point is, this is a range. This is balance. These are traders placing bets. Well, is this a great short right here? Remember how I just said I didn't want to short soybeans below the balance? Well, this isn't a huge balance, but you've got loaded up traders. Whoever's short here is like, oh, this isn't working. So is this a great zone to be shorting in? No. Could it fail here? Absolutely, it could fail here. But it's not as strong as like a straight beeline move into an area. And we've seen this a couple times in gold in my room.
December Iceberg by NQ, 151 contracts.
We'll come there in a second. Actually, this is the 5 minute. Oh, that's the hourly. Hold on. So there's a difference between coming to important zones, whether you're just sitting, like at the time, this was an important, let's see, which one's the one I was looking at. I think I had shorted this one the other night. I can't, this is gold. I don't even want to start looking at gold. But the point is, there's a difference between having one, like a straight line move into an important zone. Those are the best shorts ever versus building balance right before a zone. See what I'm saying? So this is an important zone, but it's not a great short area. If this happens, once we get through that, then that's a very good short area, right? So this is kind of iffy is what I'm saying. There's no like, it's not slapping me in the face which way to trade here, but then I have the real-time volume, so I'll let that tell me, right? So we'll come back there in a second. Let's see what's going on here. I did not get filled on my aggressive entry in ES yet, and you just heard something in NASDAQ. So let's see what's going on in here. Threshold in NASDAQ. All right, filled on my short in soybeans. Never got the ATR above, so I was willing to short it. We already know the thesis is short, but I do know this is actually, we don't need to guess. Let's just go to our, see where our stop is now. I'll come back to NASDAQ. Hopefully it will wait for me. With this ATR, just to make sure the ATR is the same. It's 2.55 now. So let's put that in. There, and I can stop out at 59.81. So I round up, so 59.60 is my stop. Which is basically right where that is. All right, so that is my short. And there you can see what's below as well. We already came up with the thesis of short, and then look where all the liquidity is. Remember, this is not showing, oh, guys want to buy this, I want to get long. No, it's this. These are magnets. These are guys that want to get filled. And the longer it's in here, the more they want to get filled, and they will get filled because they are the big players and they can push the market into their orders when it gets close enough. So that doesn't mean you just automatically short, but this just bolsters my thesis, right? So I think I'm on the right side of the trade. If this comes back, then it stops me out, on to the next one, right? That's what trading is, guys. You're putting yourself in position with an edge, and then you take the trades. Some are going to work, some aren't. But if you have an edge, they're going to work more often than they don't. And that's all trading is. It's nothing more than that, right? And that's why it's not, you're going to make a set amount every day, because every day is different. You're going to have some winners, some losers. But if you have a true edge, and this is the best edge I have ever seen in my 20 plus years of trading, then you know if you just keep taking the trades over the long period, you will be profitable. That's what trading is. Every webinar, liken it to a casino, it's the same exact thing. They know mathematically, they have an edge, they don't care, they care, but they don't start changing rules and giving up if they get smoked by a big player, because they know over the long run they are going to make money because they have an edge. This is the same exact thing. If you trust it and you understand what you're looking at, this is the ultimate edge. So you just keep taking the trades. Some are going to win, some are going to lose, some are going to be really annoying, some are going to be ticked. You're filled to the tick, just like, you know, you've seen your whole life. Nothing really changes in that aspect, but you know, you should know, especially after watching me after all these webinars, that this is the ultimate edge, right? All right, so this is interesting, right? This is showing now ATR's, wow, 37.66. Let's put this in quickly. Go through the whole process again. Top of that zone was 11 6 41.50. We have our ATR in there. Bottom of the zone is 32. 11 6 32. All right, so we got that. Let's check our lugs. Where's my lug? Here we go. Above the yellow lug, so I know if I want to go long aggressively, I can. Right, that's my rule. If I want to go short this setup, which I possibly, it's looking like it, I need to see. So that's the setup. I need to see the full ATR to retest the failure, and I could go short, even though we're above the yellow lug. Where we at here? No man's land, smack dab in the middle of market profile composite, which is where you get chopped to death, especially this time of day, 10 o'clock to 12 o'clock. You're asking to get chopped. What am I seeing here? I'm seeing the same stuff that I saw in ES, right? You had balance, you broke down, you came back, fail breakdown. This market should have done that. Instead, it's just hanging here. This still looks bearish to me, but I need to see the setup to confirm it, right? So I'm still leading. You can see this keeps failing in this zone too. You had directional conviction here, selling tail led to this down move. Came back, failed, came back, tail, failed, tail, failed. Now, if this market's bullish, this thing should have ripped. What's going on here, right? So that's my thesis. That's my conclusion. It's an if-then scenario. Right now, I'm saying it should do that. So, but I need the real-time volume to confirm it, which, let's check. So let's just see how far down that got. So that 1632.50. Our ATR is 36.5 now. So that got more than an ATR below there, correct? If my trade room members are on here, you're looking at one of our strategies right here working in your favor nicely. So this was 32.50 down to 92.50. That's 40 points. Is that outside of an ATR? It sure is. Is this now a bearish setup? It sure is. But we're above the yellow lug, so what was I waiting for? ATR. This was actually two ATR. No, it was just one full ATR. Take it back. One full ATR. Retest. Now if it comes back, that's where I'm shorting. And my stop goes 110% of an ATR above it. Right? I can't tell you how many times this pattern happens in a day across all markets. Right? So there's your retest. If it gets within 2 points of a retest, I count that as a retest. That got up to, that was 3 points away still. 2 3/4 points. So that was actually not an official retest. So I don't like having question marks in my trading. I do have my rules. Let's just see here, because the ATR is bigger. So the way my official way of doing it is if it gets within 10% of an ATR. Right, so we can see right here where we're doing the reversion. 628.23, 628, 11, 628 is your 10% of an ATR in front of that zone. So that was the official retest. You see, this would have been the official retest based on 10% of the current ATR, right? So two points I was using as the standard, right? But the actual dynamic way to do it is 10% of an ATR, which would be 3.7 points, right? Because it's 3.6 points. We just saw the spreadsheet is 28. So that is an official retest. Now I can go short, right? Where do I go short? Well, my spreadsheet shows me it's 110% of an ATR outside of the zone. I can go short at 90, I'll round up 90.75. And I can put on 1.84 NQ, round up 2. So get this ready to go. 90.75 is where I will enter this short. That would be 100%, 110% of an ATR below that. So that's one tick off. There you go. And that's where I was shorted. That will be an official ATR. Retest, failure, 110% of an ATR. I will short. Now my stop will be put there, and it even shows me where my stop will be on this spreadsheet, my handy dandy spreadsheet that someone, Jay Labrada from my room, made, which I can't thank him enough. I will stop out at 82.93. So you can see what I'm risking here. That's a lot of risk. I understand. Well, I cut my size down based on that risk, right? And I know if this is right, especially what I'm looking at structure-wise, this could be a 200-300 point trade to the downside. And we got a long way down to the blue lug, 85. Right? 385. So, locked and loaded for that. Let's see what happened in the S. Never got the ATR above there. So this is still a potential, but we are above the yellow lug on this last setup, right? So I'm still, just like I did with NASDAQ, I'm waiting for the full ATR retest to take this trade. Does that mean it's going to go retest? No. That's how I'm trading it, though. If I miss it, I miss it. There'll be another setup right around the corner. And I know I'm going to be short NASDAQ anyway, so if it does die, I'll be mad I didn't put this one on, but I have NASDAQ on. So, so what do we need to see here? This never got an ATR above here, right? It only got about 7 points above there, 7.5 points. The ATR is 9.48, so my short is not invalidated. So now if we get 9.5 points below here, this was at 79.75. So basically 70 quarter, retest, fail, I'll go short. There is a chance it doesn't retest, and like I said, then that's fine because those are my rules. All right, any questions, Bruce? Of course, I got filled. Hey, remember we talked about the tick out? It's astounding. Look at that. And I even went 110% of an ATR, and I still got ticked. This is the stuff that drives me crazy, as you guys have heard many times. But it is what it is. Filled. Stop goes in at 82.83, 683.
Eighth trader was asking about your NQ course. That is on the if you could give some insight on the NQ course that's on the Bookmap store.
Yeah, so NQ course was made by my partner at the time back then. He's since moved to Italy. He's actually a big horse trainer, so he's I don't even think he's trading currently, but he was an expert at the NASDAQ. So it's I've gotten rave reviews about it, but it's about the about how he traded it and all the idiosyncrasies of that market. There's so many different idiosyncrasies that you can apply to this stuff, obviously, but this is not what's in that course. It's more of the way he traded it, and he was an expert at trading it, right? So it's a great course, and I do employ some of the aspects of what he talked about, but it was made by my partner Nick a couple years ago. But it's every person that's bought it is not every person, but I've gotten a lot of emails on how helpful it's been for them. So that's what that course entails. But it's not about the SI indicator, right? So that course was actually made before the SI. It's about Bookmap and how he uses Bookmap to trade it, but it was before the SI indicator even came out. So, but you can employ his methods with stuff in here if you want to focus solely on NASDAQ. I don't agree with focusing just on one market because you're going to be, if you're trying to make a living at it, because you're going to be forcing trades. But if you want to specialize in a market, there's nothing wrong with that, and that's a great course to specialize. There's a lot of nooks and crannies in there that you would have never thought of trading the NASDAQ. All right, so let's see, the ATR in here is 27. Top bottom of the sun was 62. We did not get an ATR below here. We got 23 ticks below here. Actually, take that back. That is real close to an ATR. Forgot where we were on the lugs here. Hold on. Let's see. I didn't even look at the lugs. Actually, this setup I need to be in aggressively. So I know we're above the yellow lug. One exception is if we get setups at the red lug, or at the major lug. So I'll go long aggressively at the blue. I'll go short aggressively. That's how powerful these things are. I can show you chart after chart after chart just last day of markets bouncing off the major lugs. So my rules are I actually get in aggressively, which would be, I think I set this up, did I not?
Yes, December Icebergs by yes. 701 contracts.
This is down to 27.
Yes, December Icebergs by yes. 701
I'll
contracts.
go over there in a second. I should.
Yes, December Icebergs by yes. 705 contracts.
Well, 88.62. No, that's not right. Is that right? Yeah, that was the bottom. So I should be in aggressively at 88.32. That's 110%. I could trade 5 MCL. So I would not have been filled. It didn't touch 32 yet. So that's where I will short that market. Right? Because I was potentially waiting for an ATR retest failure, but this is the red lug. I take these shorts aggressively out of the zone. So I'm going to short that aggressively. I get filled, and I'm going in ATR, which is 27 ticks above that top of that zone, which would be 99. 88.99 is where I would step out. And I could put on 5 based on that risk level. All right. Hey, we got a little bit below my fill price, so I can't complain about that. It's pretty sad when all you can cheer for is that you don't get filled to the tick. I think I've been pretty upbeat today, though. No, not a lot of complaining. Granted, not a lot of trading, but all right. So you heard all that ice firing off. 700, then another 800 came in right after that. All right, so I'm going to clear out this double whammy because there's just so much that's gone on since then. We'll keep this lower one in for now, just to have an idea. I'm going to clear this out too. So remember, the way I'm trading the most recent volume event, aka setup, right? All right, so you can see where this came in. Use your crosshair and just basically track where it came in. You want to incorporate out. Yeah, it started coming in here, but you can see the price went up to here, and it was still in this spike down here. Right, so you got to incorporate that, and it came down to there. So use my easier. Top of the zone, bottom of the zone. Change the colors for buy ice. Okay, because there's a lot of zones in this area with the same color. But did you see there how my rules kept me from going long there, right? I never got long because I didn't get it, and I'd be taking it on the chin right now, right? So per my rules, I never entered that long, right? And I'm still bearish overall, like thought-wise, but until I see a bearish setup, I'm not taking it. So this is what the beauty of this, like I said, you know, you're not forcing anything until you see actual volume setup that's bearish. I haven't gotten it yet. I got one in NASDAQ, but I haven't got one in ES yet. So this is officially canceled because we did get an ATR below there, I believe. Or did we? Well, actually, it is canceled anyway because we have a new setup. Take that back. So this is done. But now I can trade off of this newest buy ice, right? 76 quarter is the top of the zone. 73 quarter is the bottom of the zone. So I'll go through the whole process again. It does get annoying when there's a bunch of setups, but I'd rather have a bunch of setups than nothing going on. Okay? Just been happening lately. 6 quarter. And be aware, more Fed chirping at. You guys can see this right here. I just don't understand what's happening over the last for many years. Why this is going on? Look at this. 1, 2, 3, 3 Fed dudes, and then a Bank of England guy, and then you got Biden. So this is probably a time that you don't want to be trading unless you like getting whipsawed to death. That's really important to know, right? So you're not. You know, one of the trades that we're trading, I don't even trade it when guys are talking. It's just you're just rolling the dice because it's new information, like we talked about. This market is an absolute.
Gold stocks stopped by GC, 592 contracts.
Whipsaw city right now. I don't think anyone's talking, but it's trading a little ridiculous. All right, so let's check our lugs. Remember, I'm already short NASDAQ. That's not feeling very good right now, but I got, you know, I follow my rules. Follow my rules. This thing's got to get a full ATR outside of the zone to stop me out. Otherwise, I don't let these algos screw with me, right? And you can see here, this is Algo City, right? This is why it's so choppy right now. This is another thing you want to pay attention to. We talk about all the time, every single minute in my room, basically. Look at this volume in the NASDAQ. So this is relative volume. This is the 100%, meaning it's normal for this 5-minute period or these 5-minute periods. Look at that. It can't even make it to normal. So when you see volume like this, you better be, it's either you leave your computer or you're ready for the bucking Bronco whipsaw algo. It's a little better than ES, but not much. Right? So when you see that, big money's not playing right there. It's just this. I know there was some buy ice, but overall, it's Algo City. That's why I place my stops where I do, so I don't get whipsawed out of my trade. Until this can violate this volume event and more than an ATR, I'm staying in it unless I get a new setup, right? All right, let's trade this. ATR in here is 9.54, so we need 9.5, at least 9 3/4. This is definitely, that's an ATR. So this is now potentially a long setup. Are we above the old lug? I maybe should have been getting in this aggressively. Hold on, I might have missed a trade here. Come on. We're above, I just missed a trade there. So I should have been in. That's upsetting. was thinking this went back below the yellow lug, so I was waiting for a retest. 76 quarter. Did I already put this in? 73 quarter. This hurts too because this would be a nice hedge for my. Not that I trade that way. Yeah, I didn't put this in. 76 quarter, and then the bottom was 73 quarter. Hopefully I can still get this on. APR is 9.66. I should have been in. This is the buy side, right? 87, and I can put on 3. So I met.
December stocks top 513 contracts.
That really hurts, like big time. All right, what I'm going to do here, because I would have been in anyway. So if I get lucky and this comes back to 87, I know something new just fired off, but I should have already been filled on this. So the way I play this is I would have filled, and now there's a new setup. Now I can trail my stop based on the new setup, so I'm not risking as much. So I'm hoping this can at least get down to 87. Probably won't, because that's just how it works. This is your new setup. Like I said, this hurts even more because this would be a nice hedge for my short and Q. Come on, you can do it. Back down there. This is where the threshold size came in. So that's your zone. And hopefully I get filled, and I'm going to show you how you trail your stop based on the most recent volume event. I could still go long here off of this setup, but obviously it's going to be way worse price. It's going to be over 10 points worse. Just go down and fill me. All right, so if I don't get filled there, well, I know we're above the yellow lug. I should have known that from staring at it all morning. But your new, I don't know why that's not accurate. Hold on. See, I drew that. Oh, that was right. Now we'll go off. That's why you want to zoom in sometimes if you're not on exact prices. So I got. Did I just sell that? I wanted to buy it. What am I doing? Hold on. Here come the errors. So I wanted to. I put it in as a sell, like a moron. All right, let me. Goodness gracious. All right. Now I'm long.
Yes, December Icebergs sell yes. 718 contracts.
I cost myself a couple points there, but I'm long. I didn't want to go short. I wanted to go long. Now we got a new setup anyway, so a lot of volume in this area. I don't know if I mentioned that earlier. Whatever way this breaks is going to be huge. All right, so I'm just going to get rid of this that I just spent all the time drawing. I love how you guys, this is my life with these errors lately. I've been making a lot of mistakes, like putting in sells for buys. You know, it's my first month trading, so that's allowed, right? All right, so 85. I'm sorry, 800 sell ice there. So let's draw this zone, and now I can trail my stop on this long based on this new setup, right? I'm going off the second one because that's threshold. All right, so I'm doing positions on now too, obviously, because of the I'm short NASDAQ, but it is what it is. So now what I can do is trail my stop based on the bottom of this new zone, right? So we got 89 quarter. We'll just see our unofficial stop out price. 37.89. If you're new to trading and this is going too fast for you, it's understandable, but it slows down. More webinar. I've got hundreds of webinars on Bookmap, and I do this twice a day in my room. It slows down, trust me. All right, APR is 9.47. Right, so my official stop now is based on the bottom of the new volume event. I got long off the first one, right? 77. This is Whipsaw City, though. I don't know if you guys have noticed. If you're trading it, you're probably getting very frustrated. I hate stopping out in the front of zones like this prior zone, but I'm not going to risk another 5 points. So if it stops me out, that's fine. I'm still short NASDAQ. So dueling positions. This is a complete chop fest. There's no volume going on here, like I just showed you guys. So trade at your own risk. Just got filled in crude. ATR in here, we already know. Let's see, all we gotta do is look. This is the great thing about this spreadsheet. You don't have to be guessing prices. Just make sure your ATR is correct. The ATR is still, it's 27.3. My stop out for this, remember I shorted aggressively right there. My stop out is 89.02. I was able to put on 5. 89.02. That's my stop. So now we just let them work. Whatever happens, happens. On to the next trade. I know I have an edge. You just keep putting them on, right? As long as you follow, you respect your loss rules, right? You made on certain days, you're gonna have three losers in a row. You're done. If you're trading 2%, right? That's just how it works. All right, any questions, Bruce? I know that might have been a little confusing there, and missing the trade and then putting it on and putting a sell on accident, but should be good to go.
Yeah, no. Sozo is asking. You can rewind the video. Sozo, like Bo is saying here, but maybe you could just quickly show the Ludwig level for the setup in CL, the big red.
Yeah.
Yeah, he was just wanting more insight around that.
Yeah, so I go aggressive. So you can see here, this already did the retest, right? So regardless, now I would be short this if this comes back down, but this is the usual. I don't know how I got filled there. This is the pattern over and over and over. TR, retest. So if this gets below here, I would have been short regardless, but I got short aggressive here because we were off the lug. And I know how powerful these lugs are. Again, I can go market by market, but you can see here, this volume setup that I'm trading off of was right here. And there's extreme standard deviation as well. Kind of close to the top of this profile, but I got aggressive off of that lug because, again, anyone who uses the Ludwig levels, again, it's not on my, almost everything I use, there's discounts on my website. Just go to my website, click on the banners. For this, if you want, she does a 3-day free trial. Do that. Put in the information box when you sign up for the trial. You saw it on Bookmap webinar, and she has special pricing. But you got to go to her website, ludwiglevels.com. So I'm just showing you guys like how powerful this thing is. They're ridiculous. It's just over and over and over in all these markets, right? Just a little head above. Try it again. Down to the yellow. Close. Down to the yellow. I mean, every market I show you, it's going to be the same thing. They're that powerful, right? So that's why, here's NASDAQ, same thing. This is why I take aggressive shorts with volume signals, right? I don't trade these by themselves. You could, but, volume is, I don't know if I mentioned this, the volume is the most important part of the trading, right? So that's why I wait for the setups there. I mean, I could pick any one of these markets. It's just the same stuff. Let's see, NG actually. What was the setup there? You guys get the gist though. And when they do puncture, many times the relative volume is higher, and then you draw new lugs and you can come up with a thesis. Watch the video. It's posted on my YouTube, and it's posted in this room all over the place, like how you can come up with thesis based on how it draws new lugs, so on and so forth. But just in the very basic sense, these are support. Like, look at that. Look at that. You just blindly, you say, I'm gonna buy the blue lug, I'll risk an ATR, and then I'm gonna hold it till the red lug. Hey, look at that. Every market. It's not just certain markets, right? Whatever I told you she has a divine calling, whatever her inputs are, and they're not pivot points, right? We had some clown in my room not too long ago, like besmirching the lugs and saying they were just pivot points and whatever. Look, it's proprietary. I don't usually trade on something that I don't really know what it's comprised of, but I don't need to know. Use this analogy every webinar for probably 3 years. When you walk into a room and you need light, do you take the light bulb out and dissect that light bulb to figure out why you're getting light, or do you just turn on a light bulb and get the light, right? So it's like, I know they work. I don't need to know. I have an idea, and some market profile stuff, whatever else she's using. I don't care. I know they work, and they work tremendously with the Bookmap setups, right? So that's all I need to know. And again, I don't add things lightly to my trade. I had a guy. It's the guy that introduced me, who I was mentoring for the Bookmap stuff. He started telling me about him. He made like $1.5 million in 2 months. He was trading small, and he got bigger and bigger the more confidence he got. He kept telling me about these Ludwig levels, and I finally started watching. I watched it for about 4 or 5 months. I said, these things are ridiculous, so I incorporated it in my trading. Right? I don't need to know why they work. I know they work. Right? So that's, and when you use them with important areas, which are the volume events, they are incredible. You have a huge edge. If you just waited for major lugs with volume signals, you would probably be a 90% trader. Most traders can't do that, obviously. All right, so we got a lot of stuff on now. Soybeans has done pretty much nothing. Short that. Crude, about to do. Of course, by the way, Phil to the tick in there too. Do you guys see? Do you guys know why I'm crazy? I mean, I can't tell you how often this happened. Did you even? I didn't even notice that. Like, I didn't even say anything about it because I'm just so used to it. It's just crazy. It's like you get filled. This is algos, guys. Did I panic out? No. I have my level. You show me you can get above here. Congratulations, you win. On to the next trade. So this is an official ATR retest failure anyway. Even if we weren't at the red log, I'd be short this market. Short that. NASDAQ, I use a different word in my room sometimes when this is being annoying. This is, it came back, but it didn't get an ATR above here, so that's still on. And I'm long. I don't like having dueling positions on, but it doesn't matter. I'm playing my setup, so it's, it is what it is. There's a way I can win both these, potentially. Why not? But it's a good hedge. I don't do that on purpose, intentional, but it is a hedge. All right, let's watch this one. This one's the most promising, I think, right now. Any other questions, Bruce?
Well, it looks like we're finding a solution here on who came up with the Step Brothers name. And I have a user who, Bo, is saying that, yeah, November last year I suggested it.
Oh, it was Bo? I couldn't remember who it was. It was someone in the room. So if you guys want to have a duel or a fist fight for it?
No.
If you guys have a fist fight, then whoever wins, then I'll allow you to claim. I'll even put you in the course.
No. He's saying that I suggested it.
Oh, he's saying no. Well, he wasn't in the room then, back because it was someone in my room.
No, but it was in a webinar here.
All right. Well, I'm going to try to find out who said it, who came, because it's in the chat. I mean, you can see here. I've got.
No, the chat. No, it was suggested during a webinar, not in a webinar here at Bookmap.
Right, but what I can do is go back and look at my chat history from my trade room, and then compare it to the Bookmap, and we'll see who came out first.
Okay.
In my trade.
Okay. All right. We'll have to. All right.
See,
We'll get to the bottom of this very important subject.
It is very important. I'll put you in the new course. Pretty much already in there because you're the one who introduced me to the SI indicator to begin with. But all right, so we're running into Tom's time. There's, we got a bunch of trades on, kind of doing positions. NASDAQ, yes, short crude. I'm short soybeans, and nothing else has really transpired. So very choppy. The main thing you guys want to be watching too, I mean, you get this time of day, you want to be looking. First of all, 10 to 12 is just a minefield disaster area most times anyway, because it's just algoville. But when you start seeing volume like this, you probably want to go do something else, right? It's just, you're just asking to be whipsawed. It's just the nature of the game. Algos are 85% or more of the trade. Right? When the big money comes in, it disrupts the algos. That's where you get the bigger moves. If there's no big money, then you get this, and they know exactly where to do it. Where they don't get, they pick up. They have the, their version of the SI indicator too. These big funds, these big houses. So they know when the big money comes in, and they shut them off, or they get run over, or whatever. But the majority of the time, it's algo trade. So that's why you have to know your areas and make the market violate those areas for you to be wrong. If you're panicking out at every move against you, you're never going to make it, because you're going to get this most of the time. So that is about it. Any other questions, Bruce?
Just going through a bunch of discussion here. It looks like there's no questions yet. Yes, business beyond NQ and ES are very closely correlated. But he got different volume signals in different markets there.
Depends on your settings, right? So you need the correct settings. Like what market did you get the wrong? I'll show you my settings quickly. I'm gonna hop off. What market did you get the volume signal?
Well, you did in the ES and NQ.
What do you
So
mean?
the question was that you were going, aren't they correlated? And then why were you taking different positions?
Yeah, just because the setups show different. The way I trade them. So for instance, I was going long this original setup that I originally missed um, because we were above the lug, so I should have been in aggressive there. So that's why I got an aggressive off of this volume setup. They are correlated, but the volume is the volume. The volume is in this market, so I'm trading off of that setup, right? I don't get conflicting setups very often. I'd say maybe 10% of the time I'll be like long one and short the other, and that's just the way it is. I mean, like I said, this is the science, the art. You can do whatever you want. You can say I don't want to have conflicting positions on, right? But it is what it is. Like I don't just ignore something happening in this market because I want Nasdaq to go down, right? I'm playing this independent. I know they move in, so obviously if one works, the other one's going to be a loser, most likely, right? Like this one may be a loser here, but I'm short Nasdaq. It is what it is. These are the setups for this market, and that's how I'm trading it. You don't get it very often, but when I do, it doesn't matter. I can't just ignore it. I can't say, oh yeah, I don't want to go long here because I'm short. The market doesn't care what I want. The market cares about volume events. So I'm trading these independently, even though yes, they are correlated, right? If you get opposing setups, you may say, this is just chop fest. I don't even be involved in this area. All I can tell you is that basically this is a pretty big area, right? Overall, this is a very, very, very important area. Whatever way this market breaks today and or tomorrow, if it just stays in there the rest of the day, then it's tomorrow. You're going to get probably a 100-point move would be my guess, at least 50 to 100 points. That's just a guess. It's just my opinion, obviously. But from these are loaded up traders. Right? The guys that are selling are running into huge buy ice. The guys that are buying, they ran into some sell ice. There's some stop runs. Whoever's on the other side of the stop run, they're taking the orders passively. There are invested traders in this area. Whatever way this breaks out of here is going to be the whopper move. My opinion, and it's not my opinion. It's actually what's happening in the market. All right, that's all I got. Kind of a crappy trading day so far, but hey, but we got 14 Fed speakers here in a couple hours, so be ready for that. That should liven things up, make it even more impossible. That's all I got, Bruce. Unless you got any more questions.
No, sir. I think we're all set. And I put Scott's contact information both in the chat in YouTube and in Discord, so you can always get it there. You've got his course information, his website, his trading room, his Twitter handle, etc. So you can always reach out there. No, that's it, Scott. Thank you very much. And when you get your course together, we'll do that special event with you.
Definitely. What I'm going to try to do, it's going to take a little bit, but what I want to do for the event, I'm going to show some of my old trading. I have video of me trading. It's not going to be for kids because there's a lot of swearing. But when I was scalping, you guys can watch that and watch my P&L like flip, $20,000 at a time. So that should be fun too. So I'll try to have that set up for the event as well.
Okay, maybe put little beeps in or something. I don't know, but
No.
all right.
You got to hear it. It's hysterical. Like again, you're going to see why I'm crazy. But when you're talking, if I don't talk to myself, then my head would pop off my. So there's a new setup here, by the way. You could just get out. I mean, I'm about to stop out of this anyway. But again, I'm still short Nasdaq and I'm short crude, and those are moving in my direction. So, but there is a new setup coming in. Again, watch this area. When it gets out of here, it's going to be a whopper. All right, I will see you guys next Thursday. I do this every day, twice a day in my room. So if you want to learn more, that's where I'm at.
Excellent. Thanks, Scott. We'll see you next Thursday.
Yeah, thank you.
Okay, bye.